Okay, Steve, let's talk about some stocks in the news. We've got JCPenney down big. Can it recover from this, the president leaving?
Well, Michael Francis, who was Ron Johnson's hand-picked marketing chief, president of the company, and Ron Johnson, of course, labeled as the guy who helped Steve Jobs conduct the vision of the Apple retail store. It's been a disaster lately. JCPenney had the worst performance in its history as a public company on a single day a couple of weeks ago. Today it's down, some 10% early in the session after this marketing chief leaves. And you have to ask the question of, their big pitch was, we're going to change the way we do business. We're not going to have sales all the time. We're going to condition our customers to just expect low prices all the time. The market isn't buying it so far. The stock is actually trading below where it was when, at the beginning of the year by a wide margin. So it's, it's going to take some doing, and we'll see what they come out with when they release their next earnings quarter. And if, they're having some real results, I think that's what it's going to take for this stock to actually get some recovery.
So speaking of earnings, we've got Oracle reporting and Jeffries and FedEx. What's happening on the earnings front?
Well, the reports coming out so far have been for the end of May. And the end of May, if you recall, was a pretty tumultuous time. We had a lot of uncertainty around what was going on in Europe. We still had the Greek election ahead of us, which we've since learned worked out, I guess, as well as we could have hoped. But Jeffries reported some weakness in their fixed income business, some, again, back to the turmoil in Europe. FedEx said slow global growth, which we all know is here and is going to continue for some time, we anticipate. Oracle, however, reported a really strong quarter. They came out actually earlier than they were expected to. They were supposed to report Thursday. They came out after the bell on Monday. And they basically said there's a lot of turmoil in Europe, but we're not seeing the pushback from our customers yet. They're still confident in us, and we're still delivering. They beat on the top and bottom line. So it'll be interesting as we get into July and you get the big flood of corporate earnings reports, if Europe is something we just talk about or if it's something that really starts to show up in the numbers.
You mentioned Europe. Is it sunny skies from here, or is it kind of same old, the clouds will gather again soon?
The clouds are already gathering. We got the result we kind of anticipated out of Greece, but the Spanish plan to bail out their banks clearly had less legs than people hoped it would. The market has held up well this week. It could be people anticipating that we're going to get something more forceful out of Europe, whether that's the IMF getting involved and giving them some kind of financial backstop, whether it's a kind of coordinated central bank action around the world, which has been rumored. We saw that in the fall, and it produced a huge rally in the market. So that's something that'll be key to watch. If you do see something on that front, that's a currency debasement story, and you might see gold really take off in that kind of situation as well. Now, speaking of central banks, we obviously have the Fed meeting this week, and expectations don't seem to be for another full-on round of QE and bond purchases, but they may hint that they stand ready to act as they have to this point, and that may give the market a little bit of confidence too.